Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market wrap-up for this active Tuesday, the 18th of April, tax day 2017. And let's take a look at these markets. You know, the one common theme we're hearing is that the Trump rally keep coming out of the market. And part of that probably has to do with the fact that what President Trump has been able to do is revoke a lot of President Obama's orders, executive orders, and put his own into place. But beyond that, he's just not making headway in Congress, and the market's concerned. It gets concerned when we heard Steve Mnuchin say that tax reform, probably not this year. Whoa, that shook the market a little bit. North Korea, what's going on there? Scaring the market. So what we have is a market that is paying attention to gold, paying attention to the bonds in the note market, in other words, safe haven investments, even the yen getting another bid as the stock market is selling off. And that is probably something you've just got to keep your eye on. Industrial metals getting hit as well. Silver losing to gold rather steadily over the past week or so. So let's take a look and get an idea as to what's going on, though, in the stocks. Come down. For the weekly chart, we are up on the week, and it doesn't feel like it, does it? But we are up for the week. 9.8 points. It doesn't feel like it after breaks that we've been getting. When we take a look at an area chart of closes, we're still in a down thrust area. We've had a slight bounce, gave back a little bit of that today. When we come to a daily bar chart, it's important to pay note here where I've got that arrow pointing that we're in that general low area. You can see that right through there. I'm sure you can see that. And we got down to 23.2275. Cleared yesterday's high and closed lower on the day. It does not portend a pretty picture. Resistance, the 18-day average of closes. Potential support in the market might be back at the 100-day moving average of closes, but it has found the near-term support where I've been telling you, and that is the lower Bollinger Band. If you've been selling into these bands, you're getting hurt. If you're buying into the bands, you're getting hurt. And what it has been happening, it's crazy, the people that are buying the lower band are getting the bounce back to the 18-day average. It's actually a counter-trend type trade as you're caught in a market that is in a downtrend but not thrusting to the downside. It's working its way down. And if you listen to the press, they won't tell you that recently we were just shy of the 2400 level. Here we are at 2337, possibly going back to that 100-day average near the 2300 level. Momentum-wise, sort of stuck here, just sort of drifting with a downside bend to it. As we get into the Dow, you can see the lower highs. Again, the battleground, the 18-day average. The problem that a lot of traders like me that are having in the market is, do you tell a client to sell the 18-day average and risk a lot trying to just get back to the lower Bollinger Band? It's very difficult to do, and that's keeping a certain amount of the volume away from what's going on. We also have earnings season, and you're going to get mixed bags all over. Goldman missed today. You're going to hear the tech companies coming out. We'll find out how good or bad they're going to be. Apple's got a lot of good things happening shortly with its new phone, but don't know. NASDAQ, not going much of anywhere. It did not get to the 18-day average. It just missed it today. And now the market is still pointing down in momentum. The trend remains down. Nothing pretty on the chart. And even if you get bounces in the chart, you're not getting a bullish move. Here, for example, the Russell. Even with this bounce today, all you are is coming back to the 100 and the 18-day average of closes in a flat momentum market. It's got a higher high and lower low. So what I think you can sum this market up is one that's leaking away, taking out parts of the Trump rally as he's not getting done what we were hoping would get done in his first 100 days. He'll tell you all the great things he's done. The problem is, tell me the things that he's gotten done in Congress other than those that he can do with the stroke of his pen, and we're caught in the middle of no man's land. I guess you could say that he did get the Supreme Court justice in. So, I forgot to say that. That is a positive he won. However, to do so, he had to use the nuclear option. It's a win, but is it a win because of how they had to do that? In the VIX, and by the way, I'm not being pro or negative Trump. I'm just calling the markets the way they are. The VIX, just what I said, you try to take the market out and it falls back. But you can't get away from the fact that we have widened to the upside, the Bollinger Bands, and on pullbacks, it's a much shallower run now to get to that 18-day average because it's getting yanked with the market to the upside as it corrects an overbought condition. Nothing bearish on this chart yet. 30-year bond. Yesterday you closed under the upper Bollinger Band. Today back over it. You can spend, 3 to 5 days in a row over it. And you're trying to embed. So if we take a look at the action here, both numbers are over 80. Yesterday both numbers are over 80, but not the day before. So tomorrow's the day that you can afford, because you close so much higher, to come down to even just around 154 or so to the Bollinger Band, and you're probably still in bed. So it's all still good looking on the chart overall. 10-year notes, pretty similar, but just overbought. Cannot lock in that bull trend. This market will stay overbought no matter what happens tomorrow. The June dollar index, look at how it's leaking away. Is this a good thing or a bad thing? Well, part of it's going to keep the Fed wondering what they should do. The market, in terms of interest rates, are lower in most cases than they were when the Fed raised their interest rates back in March. Sounds like a long time ago, but it's, about a month ago. That's all that it was. And as we take a look at them talking about their balance sheet, that they're going to trim it back, well, we've been expecting that. And the question is, how's it done? What a gradual period will it be, and so on? Who's going to be running the Fed at that point? There's so many unknowns. Not sure what's going on. The other thing that's hurting the dollar is I think that any idea of a May hike is off the table at this point. The data's just not there for it. June, very possible. But even that, if you watch the Fed watch page, been slipping in its probabilities, and that's something you got to watch. Momentum still pointing down. June euro currency, higher lows, higher highs. I'm surprised it's back in an uptrend, but it certainly is. And look at how the British pound exploded today. Didn't just rally. That's what you call an explosion. 3 cents to the upside, and that's because of a major surprise. And I have to use the word on a scale of 1 to 10. It was probably a 10 in the way of a surprise of Miss May calling for a snap election in June. So she is saying, you know something, I'm not going to fight with my opponents in Parliament. I'm going to call an election, and if I win the election, they got to bend, and that's how we get Brexit done. And guess what? The market liked her action a real lot, and the pound took off to the upside. Japanese yen, well, you got to be watching all the events right now taking place in North Korea and understanding this market is nervous as can be. It's nervous about stock indices falling back. It's nervous about presidential policies here, and it's still getting a strong bid to the upside. Last in the crude oil, we saw the stocks today come out of API, and the headline number was a draw of about 800,000 barrels out of the API. EIA has revised downward their estimate for about the same thing, and then we're looking at about a 2 million draw, and I think the distillates just over 100 million that are going to be a million that are going to be a draw on the gasoline. So you look at it all and you go, okay, the market's in line, it's in a corrective mode. Will you lose the embedded reading here is going to be the big question. You lost it in gasoline, and you know what I teach. When you lose the embedded reading, prices often go back to the 18-day average of closes. That's where the market, I think, is going to rebuild itself, looking for that spring bump if it can get it. And in the nat gas, you need a story that you're not getting yet. You don't have hot weather. You certainly are getting through with the cold weather. So we're looking how the market's got lower highs, lower lows. The EIA has told us that we should expect that we're going to see a lot more natural gas consumption this summer than we did last summer as plants have converted from coal to this. But the market seems to be fairly imbalanced with a bearish bias right now. I'm looking at resistance at 327.5, support 316.25. So you put it all together, those are your game plans, but where do you go with everything? And by the way, if you're missing today the fact that I could not put up the ETFs, it has nothing to do with us doing everything wrong. It's our vendors having trouble with the charts, not us. We can get the quote, but we can't get the charts to go. I'll put them all back when they get the power problems resolved. So with that, I'm Ira Epstein. You have yourself a good day, and I will talk to you all first thing in the morning. Take care now.